yet. So far, demand has been strong. There has been no price elasticity. Consumers and customers and enterprise customers specifically are still buying. So we haven't seen any cut in demand. All we've seen so far is a cut in valuation, which is probably rationalization that's been long overdue. But we haven't seen anything yet on the fundamental side that gets us to be a bear.
Brent, what would you say about the fundamentals? I mean, we've just come off a week where we've seen the retailers raise some concerns about consumers, and Cisco about the macro picture, Snowflake and NVIDIA as well to some extent. You're the bear here. What are you seeing?
Yeah, fundamentals are deteriorating. Workday, Snowflake both called out things. Our deals are pushing, and we're not even into the full pullback of the economy. So we ultimately believe that there's going to be a cut. We've already cut ahead of what we think is going to happen. As Haney points out, valuations have come in, really hard. So we think ultimately a lot of this is baked in. The IGV, the software index, is down 27, 28% year to date. Many of our stocks are down 40 to 50, some cases over 60%. So we've seen multiples go from 19 times forward revenue in software to 7. We can see trough at 5. So we've said there's still 20% down, but we've had quite a fall. So I think selectively the call is to be picking away. But make no mistake, companies are seeing fundamental weakness. We've heard it in earnings calls in the last week. And ultimately, I think it's going to get harder as we head into a potential pullback in the overall economy.
Yeah, that's interesting, Haney. On that point, I wonder, people are still trying to draw threads through all of the macro commentary, through Workday, through Snap, and try to figure out what's going to happen with Salesforce tonight. I wonder if you think CRM has the power to either ratify or negate a lot of what we've already heard.
Right. So look, I think from the fundamentals perspective, I look at things like what's going to happen. There may be slight waning in demand because of the news and the demand cycle around inflation and what's happening. But fundamentally, I think these have already been captured in estimates and potentially even valuations, more so on the valuation side. When Brent talked about valuations being cut for software from, I think a high was 40 plus times forward revenue, now back to a more normal rate of, somewhere between 5 to 7 times forward revenue. I think these valuation cuts are reflecting a potential slowdown in what's coming. So I think it'd be interesting to see what Salesforce does tonight. But my guess, it's not going to be a dramatic release.
Yeah, Brent, it is interesting to read some of these reports of channel checks still solid in the case of Salesforce, but maybe with a little bit less of the historical upside before print.
Yeah, they're softer for sure. Things are slowing. You can feel the tension in the checks that we do. Ultimately, to Haney's point, the stock is 4.5 times the revenue. I mean, it's one of the cheapest spots. Salesforce typically troughs at 5, so we've gone through trough. So for us, Salesforce looks really attractive. The setup is a difficult one for them. This is their toughest comp of the year right now. So we think the risk is, do some of these large deals they close get brought down into smaller bite-sized chunks? The elephant to antelope analogy of cutting the transaction size down. But I think most investors are bracing for a guide down. And ultimately, if we don't see that, the stock bounces off of 4.5 times. Even if they cut a little bit, I still think we've got a valuation floor put in for Salesforce.
Haney, let me try something out on you. I've been trying to figure out how to look at software, and I see 3 categories: Fortress software, big software, momentum software. Fortress is like Microsoft, Alphabet, Adobe, Oracle, things that are around 200 billion or over. Big is 200 billion to around 100 billion, Salesforce, Intuit, PayPal, ServiceNow. And then momentum, stuff that's below that, like your Palo Altos, Shopify, Snowflake. It does seem like the environment is different, and even the stock action is different for each of those. Is that a fair way to look at it? And which do you think has been priced most fairly at this point after these declines?
Well, I think the smaller cap names have had a much bigger rout than the big cap software tech names. I think on most small cap tech, we're down 60, 70% from their highs, while we're down probably 30% on the big cap names. So I do think there's a lot of value on the smaller cap name side, but they will probably be the they'll probably recover later than the bigger cap names. I think the bigger cap names on the upside will move first, and then you'll see the small cap names move after them.
Okay, Brent, just because the smaller caps have declined more doesn't mean that they're the better value, though. I wonder how you see it.
Well, I think the small caps have gotten rocked. So you're now seeing private equity move in. Thoma Bravo, Vista, a number of the private equity firms. You're seeing strategic transactions that are getting done. And I think that's going to be puts a floor in for a lot of the small caps. Small caps have gotten hammered, and we think that there's way more upside in small than large right now because of the valuation. And then you look at the takeout that could happen. You're talking 30-40% upside on a lot of the small cap names. So I think we're going to see we're going to see there's a lot of excitement there. Yes, in a downturn, they're going to be susceptible to a harder time than the large caps, but right now, I think small cap looks way more attractive.
I want to get both of your takes on an idea that Snowflake brought up in their last quarter. It was a big focus. Frank Slootman, the CEO, was on Tech Check on Friday, talking about the benefits of a consumption-led revenue model. Have a listen.
There's really no lid, if you will, on our ability to grow because customers, can consume at will. There's unlimited capacity and infrastructure available for them to do it. So as some, sell-side people have maligned the consumption model, it actually is the explanation why we have such tremendous growth and why we have such great net revenue retention rates.
Haney, let's get you first on this. Is this a good model in a downturn, or should cloud companies be focusing on locking customers into longer-term contracts, especially as they face a potential downturn? Can every company do this also?
Look, I think by and large, anytime you provide value and a return to value to a customer and you're getting paid by creating value for the customer, that's a win-win for everybody. Obviously, subscription models, when you're locking in somebody for a long period of time, is better for a company, but it may not be relevant in terms of when the value equation takes place. I'm a big fan of continuing to experiment with models, business models. And so far, the SaaS model has been the winning one from a valuation and a company growth perspective. But I do think you're going to see more customers demanding much more value-based pricing or consumption-based pricing as well. So it'll be an interesting transition if that does happen.
Right, with so much focus on it, too, you may see customers asking for more of this kind of model. Brent, what do you think? Is this a good play going into a downturn?
I think it's a great play for kind of any market, which is you base the price on value you're getting out of the system. And so the downside for them right now is they had one large, consumer-facing story that pulled back, and that they highlighted in the call. Hey, like, we're seeing some pullback in demand because they're not using it as much. So that's the downside. But I think ultimately it's the right model over the long term in any environment where you're helping your client based on, are they using, versus I'm buying a bunch of seats and I don't use them. We learned that from Siebel, which was all shelfware, and that we saw what happened to them. So ultimately, I think the Snowflake model is the right model from consumption perspective over time.
So in the end, you guys agreed on something, the consumption-based revenue model. Haney and Brent, thank you very much. We'll talk to you guys again soon.
Yeah, they agreed on a lot. I think, smaller software companies too, and turning now from software